People, what's good? We took two trades this week. I have two $100,000 accounts. One trade, we lost a combined $4,400. And then the other trade, we won for a combined $5,400. Ending the week profitable. Before you get into the video, I do have something special. If you want to learn more about Forex, if you don't know what the foreign exchange market is and you need somewhere to start, click the link down below. I have a Forex program where it talks about all the terminologies in Forex, discussing pips, reversal patterns, support and resistance, and a lot more. It's giving you more insight on what type of trader you want to be, what type of time sessions you want to trade in, and how to approach finding the correct broker to start depositing money and start trading in the market. If that sounds interesting and you want to look more into it, click the link in the description below. I will make sure I link it. Click the link. It's going to take you exactly where you need to go, and you're going to get the information you need. Make sure you like, comment, and subscribe on the video. Please get your boy out there. Enough talking, because I know I've been yapping for a little while. Here's the video. Enjoy it. Let me know what you think. Alright, y'all, so we got three breakdowns. We have first one USD CHF, second AUD CAD, and then third we're going to talk about that recent play we took on, I think it was Euro CAD. Where is, yeah, Euro CAD closed the break even. So three pairs we're going to talk about. The first pair we're going to talk about is going to be USD CHF. Then we'll get to AUD CAD. Then we'll get to Euro CAD. So let's break this down. On USD CHF, the reason why I was looking for buys was when we were drawing out price action, we see price establishes bullish trend due to the break of the structure. Then price had this correction all the way back down towards our higher lows, found rejection, and then had the push back towards the upside. Then had another correction, and then had another push. On this last push, we see what? We see that we have this bullish variation pattern get established where we have three bullish candles engulfing past that previous bearish candle. And then on these three bullish candles, we see that last bullish closure gave us the closure back above the zone that was treated as support / resistance. Once I saw price get back above the zone, I went towards my 4-hour time frame. On this 4-hour time frame, what was established? Already, I don't like how this is looking, but we're going to continue to break it down. On the 4-hour time frame, we see price go from this bearish to then bullish trend. And what I was looking at was when price was in this bullish trend, I counted this as structure. And then once price gave me this established break past my lower highs or break past my higher highs, this is when I went towards my 1-hour time frame. On the 1-hour time frame, what happened? We saw as soon as price gave us this 4-hour break of structure, we saw that the 1-hour had the break of structure. Same thing, being in sync with the 4-hour timestamp. And if we go towards the Discord, if we go towards the playbook, and we look at these scenarios, on the daily time frame, we saw that price was bullish, but we know that this is a continuation trade back towards the upside. Why? Because we are where in the market. If I go back towards the daily time frame, we see price is bullish, and we have that recent break of structure, and price is above that zone. If we're above that zone and we're bullish, we're looking for buys. You can see right here, price is bullish, price is above the zone. We are looking for buys. Or if you just look at the last example, for instance, price had the push, we had the correction, we were below this zone, but we was at our higher lows looking for buys. We're not at the higher lows. Price has already shown us rejection of these higher lows, and price had the push back above our zone. Again, still in a bullish scenario. We're above the zone and we're looking for buys. You see how price found the rejection, had the push. We didn't find entries here. Second push, we found entries here due to price getting back above this area of interest. And since we know that price is having this continuation move towards the upside, we obviously know that the daily and the 4-hour aren't in sync, because if we were in sync, the daily time frame would have presented me with the break of structure. And as price presented me with this break of structure, the 4-hour would have looked like so, presenting me with that same break of structure. So now when we're looking for the retest, so as soon as price gave us some type of retracement or correction back down towards this daily structure point, ultimately we're looking for price to tap back to where? The last break of structure on the 4-hour time frame, since the daily and the 4-hour are in sync. In this case, the daily and the 4-hour was not in sync, which means what? If the daily and the 4-hour aren't in sync, the next time frames to be in sync is the 4-hour and the 1-hour time frame, aka a counter trend scenario. But in this case, it is the continuation trend of the original bullish trend. We just don't have the daily and the 4-hour in sync, which is fine. So after knowing what type of scenario we're in a counter trend trading scenario because we're using the 4, 1, 15-minute, and 5-minute time frames. We are looking to carry out this trend back towards the upside. So as soon as price gave me that closure back above, I went towards the 4-hour. This is when we found out what? That the 4-hour was bullish, and when price gave us this continuation move towards the upside, we also had the continuation move happen. The 4-hour was bullish, the 1-hour is bullish due to the breakout of these lower highs getting established around here. And then as we broke out of these lower highs, what was the last structure break? So if we draw this out like so, right, and we drag this over here, we see that the overall break of structure took place around here, but the last structure break happened around here. Due to this being the last structure point, price established the overall continuation move, right? Yes, we have the overall continuation break happened here, but the last structure inside our overall trend happened here. So now, knowing that this is the last structure break, we mark this off like so, and we're looking for price to have this pull back towards this key level of interest. So now knowing that, we mark this off, boom, we have this being our entry level or our key zone where we want to see price come back, show rejections to, and then possibly find an entry. And what happened? Price had this beautiful retracement back down towards this 1-hour area of interest, which also allowed the 4-hour time frame to have the break retest of these lower highs, well, higher highs. And as we had the retest of this recent break of structure, we also had the retest of our entry level and that rejection take place. And like you all know, in order for price to have this pullback towards the zone, the 5-minute time frame has to go from a bullish to bearish trend. In this case, price was in a bullish trend, but it did not break bearish until we tapped back into our key level of interest. Once price tapped back into, we can see price break out of these higher lows, going from a bullish to now bearish trend. Now, our objective is to wait for the flip back bullish. Once we see price give us the bearish to bullish flip, we get in on the breakout. What do I mean by that? So if we draw out structure like so, we see price have the retracement, have the tap back into our area of interest, and then price has that continuation move happen around here, back towards the upside. But as soon as price gave us this break of structure, one, we go towards the 15-minute time frame and we see, are we left with some type of bullish engulfing candle? If we circle this out, because again, this was the original break of structure, we don't have any type of bullish engulfing. You can obviously see these are just bullish variation patterns. We have a bullish candle, bullish candle, bullish candle, red candle, bullish candle, but we have no strength, right? We have no volatility telling us that there's a bullish engulfing getting established. Therefore, we don't catch a setup. We continue to be patient. So what happened? The 15-minute had the continuation move towards the upside, the correction back down, having the pullback and rejection towards this daily structure, and then we took off back towards the upside, performing another break of structure around here. Once price gave me this next continuation move, I looked to see if it left us with some type of bullish engulfing. If you take a look, that is exactly what happened. We had that bullish engulfing. I found my entry, my stops 10.2. So this is where my stop loss was, and then my take profit, like you all know, since we're using the 1-hour time frame area of interest to find our entry off of, we use the 1-hour time frame structure highs to put our take profit. Based off of this, we see that the first original take profit level being those body candles brought us back a 1-to-1, which is good. Now we just simply adjust until we get a 1-to-2 risk to reward in return, which was around here. And then once we had this ready to go, you can obviously see as soon as we got our entry, price went directly towards our stop loss, hitting our stop loss and taking us out this trade. Was this a good trade? No. Why? If we go back towards the daily time frame, the first thing that took place was I drew off incorrect structure. You can obviously see we have our higher high marked off here, a higher low marked off here, and the recent break of structure marked off here. But in reality, if I'm drawing out structure, we see price have the push, correction, then price had the push, correction, forming this double bottom formation, and then we had another push that established this break of structure. Well, as soon as price gave me this break of structure, where would be my last previous low point that established the break of structure in the market? Would it be point A or point B? It would be point B, since this is the last low point that established the break of structure in the market. Therefore, I should have had this zone marked off like so. And then if I would have had this zone marked off like so, I would have saw price have this huge correction back towards the downside, which then presented me with another break of structure. As soon as I saw these body candles close below my body candle, aka my higher low, this was my break of structure. Now I would mark this off like so, being my new lower low. Well, we'll do like this. I would mark this off like so, being my new lower low. I have that recent break of structure happening around here, and this is still the same. This is my lower high, because this is the last previous high point that presented us with the break of structure. Now, looking at the chart like so, this is a horrible trade. Why? Because we're simply in no man's land, or we're at these lower highs and we're looking for buys back towards the upside. Why would I be looking for buys if the overall trend of the market is bearish? I have my daily time frame that is bearish. Yes, I have the 4-hour and the 1-hour time frame that is bullish, but it doesn't make sense. One, the daily time frame is bearish. We're at my recent lower high and we're showing signs of rejection. I should be looking for sales towards the downside. And as I dropped towards the 4-hour time frame, looking back at this trade, this structure alone, all of this, y'all, is ugly structure. I don't mark this off as structure because if I clearly cannot see price taking me in the other direction like so, when we're drawing out structure, I want to be dragged in the other direction, dragged in the other direction, dragged in the other direction, right? Right here, I'm not dragged in the other direction. We don't mark it off. Right here, I'm not dragged in the other direction, so we don't mark it off as structure. We continue, dragged in the other direction. Continue, dragged in the other direction. This is not dragging me. This is not dragging me. This is not dragging me. Hold on, y'all. Therefore, the structure that we had marked off, the structure that we had drawn out was invalid. Hence is the reason why we lost this trade. If I was using the correct overall structure on the 4-hour time frame, I would have saw that price was bullish, yes, but my last structure break happened around here, not inside this area. This is just complete ugly structure. This is why I don't trade ugly structure. If I'm confused about drawing out the structure, I should have walked away, but I did not walk away, which is why it resulted in a loss, which I'm fine with because we identified that it was a structural problem. It wasn't anything else. It wasn't the game plan. It was the structure of the market. The daily structure showed me that we're bearish. I didn't want to identify it as that because I didn't want to count this as a break of structure. I didn't want to mark this off as my higher low. Why? I just didn't want to. I wanted to bypass the fact that, yes, this could be a break of structure, but I still wanted to get in for buys, being greedy. I wanted to bypass the fact that, yes, this is ugly structure, but it's still telling me bullish because I wanted to get in for buys. I was just simply being greedy. But if I was paying attention towards the overall structure of the market, I would have walked away. I obviously see that the structure, the trend of the market is bearish. We're at my lower high where we're showing signs of rejection, treating this area as resistance, where we can see when price reaches either above the market, we tap, reject, and treat it as buying power. When we're below, tap, reject, and treat it as selling power. So I should have been looking for sales based off of that. And then the 4-hour time frame, it showed me that this trade was invalid. If I'm looking for sales, I want the 4-hour to be bearish. And right now in this moment, price is bullish. Until price gives me some type of push establishing the breakout of these higher lows, I am not interested in this trade. I mean, we should have walked away. It's fine. We got our L, resulted in a loss, and we just went on about our day. So USD CHF, this is why I always say it's important to take your time when you're breaking down the market so you can see mistakes like structure mistakes. Is it valid structure? If it's not valid structure, if I'm having to think too much as I'm drawing out the trends, I need to walk away because there's simply no point to force a setup, Once we start forcing setups like so, again, this is ugly structure in the market where we're trying to take sales. This is ugly structure in the market where we're trying to take buys. It does nothing but hurt our sales, and it makes us believe if we wanted to continue to not take accountability, now you'll believe, oh my gosh, bro, what am I doing wrong? I did everything right. No, it didn't make sense. This isn't structure. This isn't structure. So it doesn't make sense. You didn't, excuse me. You didn't do everything right, because if you did, you would have won the trade like we've done here. When you do the things right, you get rewarded for those right things. When we do the things wrong, we get rewarded with a loss for doing those wrong things, aka you treat it as a lesson or you treat it as some type of painful event. It's your choice. But AUD CAD next. I guess I'm just going to keep it going off of this video. We can just pause it and then we'll pick back up once we get there. All right, y'all. So next we had AUD CAD where we won this trade for 4% in return. We got back a 2.82% in return, but it depends on what you're risking. I was risking around 2%, so you would have got 4% back. But yeah, let's get into it. Why did we take this trade? Well, on the daily time frame, we see price was in this bearish trend. We go from bullish to bearish due to the breakout of these higher lows. Price then had all these pivot points take place, and we call them pivot points because until we break past our lower high or past our lower low, giving us a structure break, everything that happens in between are just pivot points. It's not structure, it's just pivot points. Until you have a break of structure, that's when you can mark it off as being some type of structure point. But until you have a break of structure, they're just pivot points. So we had our lower high, lower low, we had a pivot, and then we got back towards this lower high showing rejection. Price had some type of push. We then had another pullback up towards our lower highs, showing us another rejection. Again, now having this triple top formation, which was then followed up by that bearish engulfing. So as soon as price gave me this triple top scenario, we're already in a bearish trend. We're showing rejections towards my lower high. So after I saw that, and then price gave me my entry signal, aka that bearish engulfing off of the higher time frames, this showed me a strong confirmation that selling pressure is coming from these rejections, from this resistance level. And keep in mind, if I go back towards the cheat sheet, the playbook, if we are in setup number 5, I believe, yes, 5 scenarios. The last setup, we see prices in a bearish trend. We have this huge retracement back above our recent breaker structure, but towards this lower high. As long as price does not give me a break of the structure and we're finding rejection, I'm looking for sales back down towards the downside. Again, going back with the flow of the market. It's not a counter trend scenario, but I know that the daily and the 4-hour are not going to be in sync. So now knowing that I'm in scenario 5, we're at our lower highs and we're looking for sales back towards the downside. Again, I know that we are in a counter trend scenario. The daily and the 4-hour are not in sync. Now we're using the 4-hour, the 1-hour, 15-minute, and the 5-minute time frame. So knowing that that's going on, we have this bearish engulfing. After I seen this bearish engulfing happen at this daily area of interest, this gave me added confluence, aka a higher probability of price going in my favor. I know that since we're forming this bearish engulfing, I know that the 4-hour time frame had to be presenting me with some type of break of structure towards the downside. On the 4-hour time frame, if we draw out structure, we see price was in this bullish trend. We then go from bullish to then bearish due to the breakout of these higher lows. We then see price have the pullback towards this area of interest, show rejection not only towards this 4-hour zone, but towards our daily lower high. Once we seen this rejection take place, price then had the extension back down, which presented us with the next break of structure. Keep in mind, as long as price gives you the body close below, if we have candlestick body close below the previous body close of our higher low or higher high, we count it as the break of structure. It does not have to break past the wicks as long as we break past the body. So as soon as price gave me this break of structure on the 4-hour time frame, I marked it off like so. We then have the 4-hour break of structure, and before this pullback was even established, if I go back, let's go back even further. Before that pullback was established, I saw that price gave me this break of structure. As soon as price established that break of structure, I wanted to see if the 1 hour was doing the same thing. On the 1-hour time frame, you can see clear as day price do the exact same thing, giving us the break of structure on the 1-hour time frame. So now we know that the 4-hour and the 1-hour time frame are in sync. Where can I see price retrace to? Well, since the 4-hour and the 1-hour are in sync, if we go back towards the cheat sheet, what does it say? Identify the market on the 4-hour. We've done that. Identify the market on the 1-hour and identify the zone. Well, we identified the market, it's bearish. How do you find your zone? You simply look for the last structure break on that 1-hour time frame. The 1-hour time frame went from this bullish to then bearish trend due to the breakout of these higher lows. Once I saw this higher low get broken, and then once I found out that this was the last structure break as well, we marked this off with our box tool. As soon as we mark this off with our box tool, we then want to count the number of rejections, making sure we at least have 2 or more rejections towards the zone. We have 1, 2, 3, 4, 5, 6 rejections towards this area of interest, well over 2, which gives me more of a valid area of interest. It gives me more confluence and confidence behind this trade. So now we have our area of interest marked off. We know that the 4-hour and the 1-hour are in sync. And if we go back towards the daily, we already know that we're at our daily lower high showing rejection. We have what? We have our zone. We understand that the daily time frame is bearish and we're looking to take a sell at this recent lower high. Okay, good. Everything is lining up. The last thing we want to see take place is simply the retest of our zone. So now, knowing that the 4-hour and the 1-hour in sync, we have our area of interest. The 5-minute time frame now has to go from what? Bearish to bullish in order for our higher time frames to tap back to. So on the 5-minute time frame, we see that we're bearish and we see price already had the flip bullish to establish the retracement towards this area of interest. Well, if we fast forward, we see that take place. Price then taps back into our area of interest. Are we ready to enter a trade? No. In order for us to be ready, we have to see price on the 5-minute go from a bullish to bearish trend. Once price gives us that break of structure, now we are ready to look for entries. Why? Because the 5-minute time frame is getting back in sync with the overall trend of the market, which is bearish. We already saw that the daily time frame is bearish. We now have the 4-hour time frame bearish, and we also have the 1-hour time frame bearish. Why would I enter a trade when my 5-minute time frame is out of sync with the higher time frame scenario, being in a bearish trend? It wouldn't make sense. So we simply wait for the 5-minute to go from bullish to bearish in order for us to find our entry. As we continue to wait, and also we have to be in our time session to trade. If we look at the time session right now, it is 4 in the morning, London session. I'm asleep. I'm not trading at this time. So we fast forward towards New York session. Boom, we are now in New York session. It is 9 o'clock in the morning. And if we go back towards the 5-minute time frame, what took place? We can obviously see price gave us an entry signal around here. But let's just make sure everything else was established. We had the 4-hour time frame. Okay, we had the pullback already get established, which the 1-hour got established. Okay, cool. This is good. So now, yeah, everything's ready to go. 5-minute time frame gave us the flip from bullish to bearish. We can see that the first break of structure happened around here. Did we get left with a 15-minute bearish engulfing signal? No. So you can obviously see around here, price did have this 15-minute engulfing pattern happen, engulfing past this previous bullish candle, but we want to get in as price is presenting us with the break of structure on the 5-minute. you can see the 5-minute time frame break of structure happened around here. So if we would have entered on this break of structure, that 15-minute time frame had to give us an engulfing time frame on top of giving us the break of structure. You can obviously see that did not happen. Price then had the retracement rejecting these 5-minute lows, but it did give you a 15-minute bearish engulfing. That's not what I want to see. I want to see price give me the break of these 5-minute lows on top of being a 15-minute bearish engulfing signal. So we don't enter this setup. We delete it and we just continue to be patient. On the 5-minute time frame, what happened? We then had the continuation break happen around here at what, 9:45 in the morning. As soon as price gave us this break of structure, go towards the 15-minute time frame, we could have found an entry off of this candle alone. And in our take profit, since we're using our 1-hour area of interest, we use the 1-hour lows. So looking at this, you will believe, okay, this is a good setup, blah, blah, blah. But it's not. Why? Because I preach, once we enter our trade, the first target needs to be these 1-hour lows. It can either be the body candle of these 1-hour lows or the lowest wick of these 1-hour lows. But no matter what we target, I want to make sure my first take profit or my first RR, risk to reward and return, is a 1-to-1. In this case, I was entered, I got my position, I got my stop loss, and I'm putting my take profit at these 1-hour lows. I'm not getting back a 1-to-1. Therefore, we do not take this trade because it is not a positive risk to reward and return. It is a negative risk to reward. A 1-to-1 shows us that we have enough distance for price to push towards that target level, and we have enough distance to get towards our overall take profit goal of a 1-to-2. If I don't have that at my first target level of 1-to-1, I simply don't take the trade. Right now, we're not getting that. Hence is why we did not enter this position. So now if we continue to fast forward, what happened? Price then had this push, didn't have enough strength to continue. Instead, we had this push. We then had a retracement forming a double top scenario. You see how price did not break above the zone. We're still finding rejection towards the zone, and we didn't go tap back towards our 1-hour lows. This is good because it's still showing us interest at this area of interest for us to capitalize on a position to sell. If price was to have some type of push, form the rejection towards these 1-hour lows, and then have a pullback, no, I'm not interested. Why? Because prices already gave us the break, the push, hitting our structured lows, and then having another retracement. I doubt that that same push is going to happen where we continue that move. The move has already happened due to price having the first push, the first correction, and then the second push. I don't want to get in on the third push or fourth push towards the downside if we've already hit our lows. I say it all the time. I want to be the first one in. So in this case, if this would have happened, this is not being the first one in. We're already late to the party. The move has already happened. Walk away. So now, seeing that price did not hit these lows, this was good because price had the pullback, forming the rejection for a second time, forming this double top scenario where price did not break above my zone, but stayed below and showed rejection. This is perfectly fine. The 4-hour, we're still bearish. You can obviously see in order for us to go bullish, we would have to break past this lower high or break past these lower lows to then have that continuation move towards the downside. Again, it is important to make sure that you don't have a structure break when we are still looking for entries. This just allows us to see that the trade is still valid and we have a higher possibility of this trade playing out in our favor. So the 4-hour was still bearish, which is good, still maintaining well within our structure. The 1-hour, the same thing. Until we have a break of these lower lows or a break of these lower highs, we are still good to look for sales. We don't have price playing around. We're still the first ones in because we still see, we were still the first ones to have the push, first ones to have the correction, first one to have the second push, but the first one to have this double top scenario take place, which means we are still the first ones to take a position towards the downside. The move has not happened just yet. So this is good. Knowing that that is taking place, we'll go back towards the 5-minute time frame and we just wait for the exact same thing. We wait for price to give us a breakout towards the downside. Like you all saw, the first breakout happened here. It was not ready just yet. Price then had the continuation move, breaking past these lows, and then having a flip back bullish due to the breakout of these lower highs. Once we saw that, I knew that the only thing I had to wait on now was either a break of these higher lows, or for price to have the continuation move, breaking past these highs. And as we have that continuation move, we wait for the next flip back bearish, giving us the next break of structure. So if we fast forward, what happened? We had this first break of structure take place. Now, were we in a time session to trade? No, this was around the daily stick. Well, the 4-hour candlestick closure. We're midday, it's 4 o'clock. It's not my time session to trade. So we're still waiting. If we fast forward. Now it's around 8 o'clock, 9 o'clock, the time I like to trade. We are moving into pre-London session. I'm in my time session to trade. Okay, good. Going back towards the 5-minute time frame. What happened? Same thing took place, like we just said. We had the original break of structure take place around here. We see price have that push, giving us that break. We were not in the time session, so we didn't enter our trade. We continue to wait. Price didn't have the flip, breaking past these highs, which we just talked about. And then we had another flip, giving us a break of these higher lows, getting back in a bearish trend. Now, take a look. Once price established this break of structure on the 5-minute time frame, the 15-minute time frame gave us that bearish engulfing. You can see this bearish engulfing, not only engulfing past that entire bullish candle, but we're also breaking past that 5-minute time frame, having a closure below that break of structure, which is what I wanted. By the time price gave us this breakout, the 15-minute also gave us the bearish engulfing with enough strength to close below this 5-minute structure zone. This is why we entered that trade. Profit, like y'all know, I just said, the first zone is our 1-hour lows. You can see these 1-hour lows, I'm already getting back a 1.32 risk reward in return, which is good. I'm already getting back above a 1-to-1. You simply adjust until you get a 1-to-2 risk reward in return. And then right now we're sitting at a 1.32. I always put my next take profit zone at this bottom wick if I'm already getting above a 1-to-1, just to see where price is at. And you can obviously see this pushed me towards a 1.87, still not where I need to be. So you simply just adjust it until you're 1-to-2. Boom. Now we're sitting at a 1-to-2 risk reward. I have my stop loss in place. I have my take profit in place. I have my entry level. Everything looks good. And now what do? You just simply allow it to play out. And as we allow it to play out, we see price hit our take profit with no problem. And if I go towards the 4-hour time frame, I tell y'all all the time, if price gives me a strong closure below the zone, okay, I will hold this trade. But as soon as price gave us this wick towards our take profit level, you simply just close out, you be happy with what you have, and you walk away not being greedy. Because half of the time when I see price give me a wick towards my take profit level, it's ready to continue towards the opposite direction. So we won this trade, I believe it was at 2.87. We won this trade at 2.87%, which was around 4% in return on my account. But like I showed y'all, going back to the Discord, we got filled really, really late, and I didn't like it. So the first trade, USD CHF, was the loss, which I showed y'all for $2,000. And then AUD CAD, we won for only $2,500. We should have won for close to $5,000, but around $4,500 is what we should have made in total. And then this is our trading challenge, same thing. We made $2,800 on that AUD CAD trade, lost 22 on USD CHF. But like I said, if it would have filled us in at the correct position, we would have made around 10,000 both accounts combined. I don't know if I'm gonna break down the Euro CAD trade, because truth be told, that trade was ugly. The trade didn't make sense, and yeah, it just didn't make sense. Who knows? I might break it down. I'm gonna break it down, just not right now. I'm gonna let y'all digest these two pairs and give me some insight back on what we need to break down further, so you get a clear explanation. Or if you like the breakdown, let me know what you thought about it. Like I said, I'm here for y'all. I'm not here for myself. I know how to trade. I'm here to teach y'all how to trade and teach y'all the strategy and the game plan. So if y'all have questions about the game plan, if I need to slow down a little bit more, because I know I can, be excited as I'm explaining this, because like I said, I enjoy it so much. But if I need to slow down, please let me know. Prayfully, y'all get some better understanding on why USD CHF was such a bad trade. Just understanding that structure plays a big role in how I trade alone. I don't rely on anything else but structure. And then AUD CAD, how we applied that structure, how we were disciplined within the plan, how we waited for the confirmation, and how we got rewarded based off of that discipline, patience, and execution. So let me know what y'all think. That's it. I'm gonna catch y'all later.